Yo, good day, guys. I know things are getting a little nuts out there. People are stocking toilet paper. The markets are going frenzy. This virus is nowhere, no end in sight. So yes, I get it. We're all kind of lost, don't know what to do. So just chill, calm your balls. Today I'm gonna, record a small little episode for all of you to see whether we can capitalize on market opportunities like this. Okay, so stay tuned today for 3 ways on how to invest with this outbreak. So the truth is, no one actually knows what is gonna happen. How is this thing gonna turn out? What is gonna happen to the virus? And that is the truth. But when you watch the news, it is always sensationalized. That is the business of the news. They must be exciting, they must be sensational. That's why you will watch it. Of course, certain news are they take it a little too far, but either way, news tend to be a little sensationalized, and it drives a lot of fear. It drives a lot of all this kind of desperateness and panic into our lives. And just look at like the recent things that's going on. Tons of memes going online. People queue up for hours just to get rice, buy toilet paper, and whatever things that they buy, whatever things that you guys buy, just chill. But the markets are reacting a little, not as much as I thought some people would expect. And there are reasons behind this, because outbreak being outbreak, there isn't some fundamental change. There isn't like a change in tax structure, there isn't a change in central bank structure, there isn't a fundamental shift in certain businesses. So you will not see like huge, movements, and that's kind of where it is. Most viruses, they come. If they stay, we will create a vaccine or we'll find a cure over time. Within a short period of time, they may wipe out some population. Not cool that way, but that is kind of where it is. Human progress will trump all these things, and it just tends to sort themselves out. Whether is it SARS, whether is it MERS, whether is it H1N1, swine flu, all those kind of stuff, they come. Some stay, some go, but we will learn to react with it, and that's kind of where it is. But within a short period of time, some businesses do get affected, and we're gonna talk a little bit about it, right? Whether we can capitalize on such an happening, and I'm gonna share with you some thoughts that I have and some things that I've bought, and some industries that I look at. Okay. So first thing I think we need to establish here is what are the possible scenarios going forward for this coronavirus. So the first scenario will be that the outbreak peaks, it simmers down, and life carries on. Right, it's like SARS, it just disappears. And I believe that this case has about maybe 70-80% chance of happening, because in the past it has happened. MERS, SARS, it has happened, and they come from the same family. We have more experience dealing with it. So yeah, the chances of this happening will be very high. Don't be too emotional about it just because there are some numbers coming in. If you look at it, an international spread is not as crazy. What does this show? It shows that the Wuhan government or the Chinese government has suppressed information for a really long time. That's why by the time the information comes out, it looks like the numbers is growing day by day. But actually, right, all these people already kena very long ago, right? So you look at international transmission, it is not as fast, and numbers all across the world will be underreported. Let's not lie to ourselves. Okay, everybody wants to calm everyone, and but to me, I don't think it will go crazy. But case scenario number 2, the outbreaks continues, and it becomes uncontrollable, becomes a pandemic, and it becomes something like the common flu, or become like HIV, or become like swine flu. It's everywhere, and we just fail to control it, which means it is here to stay. So this will maybe about 20%, 15-20% possibility. But the thing is, we will then create vaccines to work with it. We will invest a lot of money to solve it. And you look at it time and time again, humans, we do this. So it is not that big a deal in the long run anyway. But yeah, if that happens, then we just kind of have to work with the vaccines in due time, which a lot of companies and countries are already doing it. And the third possibility is a global wipe out, global pandemic, and good chunk of the population disappears. And if that happens, everything goes, right? So whatever you invest is also kena one, so it doesn't really matter in that sense. Well, let's hope things don't go that way. I don't want things to go that way. I'm placing my bet on scenario one, which is the outbreak peaks and things just dampen down and life carries on. Okay. Of course, share with me your views. Different people will see it differently, but the markets definitely are showing some signs of this is how they're embracing it. And I'm going to share with you some things that I invest in, how you can possibly make some money through this outbreak. But, my best advice to you is if you're uncomfortable, you don't know what's going on, just do nothing, okay? Don't do anything. Don't bother trying to invest in something that you totally don't understand or be in a rush to buy something. FOMO, you incur transaction costs, you run a lot of emotional risk because you don't understand what you're investing. So the best bet for someone like yourself is to do nothing. Just wait, chill, hold your balls, okay? Relax. But if you're tuning in today because you invest in the stock market or you invest in the equity market or the bond market, the REITs market, or you're an active investor, you actually invest, or you're a passive investor, either way, that you actually have some depth and some understanding of how to invest, then great, we can have a good conversation today. If not, you can still stick around, listen, get some ideas, but don't be in a rush to buy, and please don't take my word as like the word, like it's guaranteed gonna happen. No, man, this is just some of my predictions and some of the ways I look at. And along the way, I will share with you some of my principles and what governs my thoughts, and just to, get some understanding and for us to be in sync. Okay, cool. So the first way to invest with this outbreak, okay, the first thing that I've done, or I will continue to do, is to buy some digital services in China, right? So I think it is very different this time around with the previous SARS outbreak, in this part of the world, is because back then e-commerce wasn't a thing. There were not delivery services, there were minimal telecommunications platforms, telework platforms, or online dating, none of those stuff. So that was 17 years ago, right? Back then, the computer was just kind of getting everywhere, and internet was starting to become more and more of a thing. You were still using dial-up, TTT, and then your friend called you, you will hang the phone and shout at them, right? So back then, it was either you consume or you don't consume. You don't go out, that means you don't consume. But these days, there are a lot of internet services, there are a lot of digital services that can send food to your spot, send groceries to you, help you work online, do transactions online. There are many different kind of services that you can look at, and I think it's one of the best bet as of now, because it is depressed as a market, and there is an assumption that people will stop consuming, and consumption may get hit quite a bit. But like it or not, it may be the chance for all this digital play, all these digital services to get what it needs to flip its customer, because there's always a consumer habit change that needs to happen when people go from shopping at the grocery store to ordering online, right? There must be a reason, and maybe, just maybe, this virus is the reason for a lot of Chinese consumers and everyone around to, actually give serious thought about changing their consumer habits and buy things online. So I've opened some position in company like JD, Jingdong, or like Momo. It's a online digital, like something like a Tinder in China. They own Tantan. So yes. So these are some of the digital services that you can look at. Meituan, it's all in China. You can get exposure for them in the US exchange, or you can get some exposure of Chinese companies in the Hong Kong exchange, right? Like it or not, you cannot go directly to the Shanghai exchange because the market is closed. Okay, so look at Hong Kong, look at in the US, what kind of Chinese exposure you can get some digital services. I think this outbreak may be what it takes to shift some of these digital services further. All right, so I hope it works. I hope we all make some money from this, and yeah, the sellout from the Chinese market it's fair, about 10%, 7-10%. So yeah, I think it's an okay price. I bought some. You don't need to, but if you're here and you wanna consider some thoughts, and I hope it helps you. And the next thing that I invest in, or next thing that I feel it's a good investment given this outbreak, is the tourism sector. Right, so like it or not, the tourism sector is going to get hit within this region, right? Hotels, cruises, luxury retail, all those kind of stuff, they all will get affected. And yeah, companies like Marriott, Hilton, Royal Caribbean, Cruise Lines, Booking.com, TripAdvisor, or casinos in Las Vegas. I bought some Las Vegas, because I think it is sufficiently dispersed. There's some exposure in Las Vegas, some exposure in Macau, some exposure in Singapore. So yes, up to you how you want to look at it. I own Marriott. And yeah, I think the tourism sector is very resilient, although yes, it will definitely get affected in the next 1 to 2 quarters. Numbers will come down because recently there's been a lot of travel ban, blah, blah, blah. I'm not a big fan of airline, but anyway, yes, that is aside. So yes, to me, when I look at something like that, it is jumping straight into the fire, right? Something jumping straight into the bloody street. And that is kind of the way to make alpha, in my view. Alpha, which means to make more than the market. You must buy it when nobody wants. It's like how I bought an e-scooter when nobody wants an e-scooter. When Singapore government banned the e-scooter, I buy an e-scooter, $200. So as a capitalist, you want to go in at times and buy at prices when people don't want it. Right? So when I look at it, some people are afraid to go into the tourism sector, but it's up to them. I have decided to buy some stuff from the tourism sector because I think fundamentally they are strong and they will be here to stay. Right? So after the outbreak, it will take some time for people to start traveling again, spending again, and yeah, things will roll again, right? So that is how I look at it. Tourism sector, not too bad. On average, there's about a 10% discount across the various different leading companies in the sector, right? As of now, some of them have come back, and we'll see. Maybe when there's another sell-off because of this virus fear, and you can look at some of these companies. I think they're pretty good. And the third thing to invest in with this outbreak, I personally feel I want something a little safer. I want a little bit of hedge, right? Not everything equity, but also because the equity market is very pricey, very some people call it overvalue. And yeah, it's a little bit expensive. I will get some exposure in the Singapore REITs market. Right, so the REITs market, REIT, Real Estate Investment Trust, they give back about 5% to 7%, especially the mall REITs. They have been recently sold quite seriously because of all the outbreak and all these kind of stuff. A lot of fear in the market. But the Singapore property market in general has been pretty resilient because, like it or not, it's a small place. Not enough space, huh? So not enough space, you can only build upwards, and a lot of these real estate trusts, they are doing fairly well. And if you look at what the government wants to raise population to 10 million. So what does that mean? More people are going to come in, then you need more spaces, right? You need more property, there will be higher usage, higher uptake. And in general, I think because of our status as the port of one of the largest port in the world, financial hub, and the kind of population and density that we already live in and will continue to face an increase in density, the property market's pretty resilient, right? And but I will not buy physical properties because it's just a lot of management that you need to do, and it's too expensive for me lah, right? So I think a little bit of exposure into the REITs market as a kind of like a pseudo defensive play, but at the same time hoping to capitalize on this sell-off because of the virus. I think it's pretty good. So yeah, look at it. Give me some ideas. I know everyone has different way to invest, in how to invest, and different investment ideology, and I hope you learn something useful. Share with me and join our community Telegram group, join our Facebook page, and yeah, just talk to us. I hope you learned something useful today. See ya. Oh wait, don't go. It's not a standard outro, but yes, tomorrow I will be releasing another episode talking about, what I have learned through this process with the coronavirus, and yeah, what some of this panic at the NTUC, how it's informed me as an individual how to invest in the market. So yes, I hope you learned something useful. I will see you tomorrow on 3 financial lessons learned from the coronavirus panic. See ya!